This video is for AQA A-level economics. However, it is applicable to all exam boards for economics, and it is income tax. It's based on income tax. Now, income tax features across both macroeconomics and microeconomics. In macro, it's part of fiscal policy, and a key part of it is how to calculate income tax, which we'll cover in this video. And in microeconomics, it is looked at especially with regards to income inequality, and that's going to be the focus of this video. So as we can see, in 2025, or in June, as I'm making this video, these are the tax bands, the taxable income, and the tax rates. Now, the personal allowance up to $12,570 is tax-free. So in other words, your first $12,570 does not experience a tax rate burden. But if you earn over £100,000, then for every £2 you earn, your personal allowance will be reduced by £1. So in other words, when you reach £125,140, your personal allowance is pretty much wiped out. Now, remember, when we're looking at in terms of income inequality, this is a progressive tax system. So the whole point of this is that redistribution of income. So the idea is equity, and the idea is trying to help those in need and those who require more support. And it's trying to get the higher earners to provide that support and to provide the funds to transfer to obviously the lower income. So this is a past AQA paper. It was from paper 3, so the multiple choice section. And I thought it'd be quite a nice one just to get us started with how to calculate it. So we've got an individual here who's earning $40,000. And we've got these taxable incomes and tax rates. Now, what we need to do is, first of all, recognise the situation. They will have a personal allowance of $10,000. So for their first $10,000, it will not be taxable. Then they go into the basic rate, and the basic rate, in terms of the taxable income, is between $30,000 and $10,000. We need to deduct $10,000 from the $30,000, because if we don't, and if we deduct $10,001, then we are not taxing that first dollar. So what we'll do is we'll simply do $30,000 minus $10,000 and at that 10% tax rate, which is, of course, $20,000 is the difference, then 10% of that is $2,000. So they will pay $2,000 in the basic rate, but obviously they go beyond that because they're in the higher rate, because they're earning $40,000. Now, in the $40,000, we just simply need to deduct the $30,000 from that amount, which leaves it with $10,000 yet to be taxed. That $10,000 will be taxed at 30%, which is the higher rate, and of course that will then equate to $3,000. So in the basic rate, the tax $2,000. In the higher rate, the tax $3,000. Add them together, and we get A, which is $5,000. So let's look at some real UK examples. So I picked out 3 occupations in 2025, getting their median salary, and this is for a carer, which is on £22,639, a head teacher of like a standalone school, which is £71,656, and a pilot at £91,208. So what we're going to do is we're going to go through one together, and we're going to look at the carer, because that's probably the simplistic one, because there's less steps. And then I'm going to ask you to pause the video, and I want you to have a go at the head teacher and then have a go at the pilot. So first of all, let's look at the carer. The carer is on £22,639, so they remain within the basic rate. They do not exceed that amount of $50,270, so we're just focused on that tax rate of 20%. But remember, the first $12,570 is tax-free. So all we simply need to do is get our $22,639 and subtract $12,570 to make sure we tax that first pound, times it by 0.2, and we get £2,013.80. So that is how much. I mean, obviously they will have other deductions. We're not considering national insurance in this. We're just simply doing income tax. So head teacher. The head teacher now is more complex because they exceed the basic rate, similar to the multiple choice question we looked at. They still get the personal allowance of up to $12,570. They still will pay 20% of that taxable income difference between $50,270 and $12,570, and that'll be at 20%. But then they go into the higher rate. So the outstanding amount as part of their income, which needs to be taxed, is that 71,656 minus 50,270, and that'll be at 40%. So pause the video, have a go. This is what you should have got. In the basic rate, they would build £7,540. In the higher rate, they would build £8,554.40. Add them together, and their total tax bill for just income tax alone is £16,094.40. So of course they're going to pay more than the carer, and it's going to be more than proportionate because this is a progressive tax system. So now we have the pilot, and again the pilot had the personal allowance because they're not exceeding 100,000. They're still in the basic rate in terms of that difference. So that again, similar to the head teacher, £7,540 will be payable. Then they're in the higher rate, but they're in the higher rate by more because they earn a higher salary. So they will be taxed and they will be billed at £16,375.20 in that higher rate. Add them together and they've got an income tax bill of £23,915.20. Right, so in 2019, there was a big UK election. It was Jeremy Corbyn versus Boris Johnson. And in the manifesto for Labour, there was income tax proposals. And as part of that, it was to make it more progressive. And it was to bring in almost like an additional rate, if that makes sense. So it was 50% and 45%, whilst at the time it was 40% and 45%. Now you'll notice that the one on the left, it is different to the one that I very first showed you, because obviously in 2019 to 2025 they have changed, but that's what it was in 2019. Now this proposal, it was scrutinised, it was attacked. The media did not like it. The headlines really focused on it. So these were just some headlines that I really quickly found before making this video. It literally took me a few seconds just to Google it. And what we had was how much Corbyn's plans will cost you. It'll bring you back to the 1970s. It will affect almost 2 million British workers. It'll cause havoc. And it's all very, very negative. Now, what I want you to do in this video is I want you to kind of judge for yourself. What do you think? But I want evidence behind your opinion. I want some critical thinking. So I'm going to introduce the salary of £35,000. Now, the reason why I'm introducing it is because it is the average median salary of the UK in 2025. So obviously in 2019, that median salary was below that. I'm also going to introduce another salary from before. But if you're looking at that £35,000, I just want you to think, is there much difference in terms of Labour's income tax proposals and the current rate? Now, let's bring in the next one. So the next one is 71,656. I think the majority of the population would be pretty happy with that salary. So again, how does it differ? How does it change between what it was then and Labour's income tax proposals? Now, what you should find out is there is no difference. 85,000, it doesn't matter whether it was the current rate or the proposal, they'd be taxed at £4,500. And again, with the head teacher's median salary, it would be at £16,162. It makes absolutely no difference to those people based on those tax proposals. Now, it does make a difference with the pilot. The pilot's median salary is £91,208. It was the highest out of the three that I gave you. And the difference roughly is about £46.70 a month. So again, you judge as to whether you think that is crippling to the UK economy, how much of an impact that would have. Obviously, some of the consequences which would be accused by certain economists would be, well, what about the Laffer curve? Would it actually maximise tax revenue? What about brain drain? Could we be losing our job creators? And possibly that might be the case, and we'll look at that later on. But I do think it's worth pointing out these 2019 stats. So in 2019, 95% of taxpayers earn less than £80,000 annually. So they would not have been affected by this tax proposal. The median income before tax was £26,000, so obviously a lot lower than what I gave you. And as we can see, the 90th percentile income was approximately £58,300. So if we're looking at inequality and we're looking at why we would want that progressive tax system to maybe be increased. I can give you some statistics. In December 2019, there was approximately 280,000 people that were homeless, and that equates to about 1 in every 200 people, and 22% of the UK population were living in poverty at that time. So again, I suppose it's based on what you believe is absolutely crucial to focus on in the economy. Is it inequality? Is it driving growth? And it's difficult. It's really, really hard to balance. So let's explore this even further. Let's look at Scotland. Scotland is different to the rest of the UK. So since 2017, the Scottish Government has been given full control over income tax rates and bands. As it says there, the only difference is that personal allowance still remains set by the UK Government. So let's have a look at Scotland's income tax in 2025. So this is it, and as you can see, there's a lot more bands. We've got the starter rate, we've got the basic rate, the intermediate rate, the higher rate, the advanced rate, the top rate. I mean, it is complicated, and I can imagine from an administrative point, it does make it a little bit more challenging. But we know why they've done it. They've done it to focus on that progressive, to make it more progressive, and possibly to help, for example, that drive to reduce inequality. So again, let's bring in the £35,000 median salary of the UK in 2025. Pause the video, have a go. How much would they pay in Scotland? And then what I will do is I'll bring the data from the rest of the UK. All right, so what you should find is it's £4,547.33, which makes it a £5.11 a month difference to the rest of the UK, so it's not much. But they do pay more, obviously. So in Scotland, you are paying more on that salary of £35,000. If we bring in the median salary for the head teacher, again, do you want to pause the video and do you want to have a go and calculate it? Again, it does work out a lot more, £169.12. But then again, when I say a lot more, you need to think about in terms of proportion. So yes, it is more than proportionate. Yes, it's more progressive. And I suppose the question mark is it fair to obviously increase that tax burden, or if you didn't do that, would it be unfair because of those who need it? So these are the questions that we have to ask. Now, carrying out research with the Scottish system, I have found the following. So first of all, there's no clear evidence of a large-scale tax flight. So what I mean by that, there's no real evidence to suggest that people have left Scotland and, let's say, gone to the rest of the UK based on these tax policies. There's no real evidence to suggest that it's been a deterrent for example, business startups and for attracting, let's say, internal migration. There's been no evidence to suggest that. It does cause complications. It does make it difficult and more challenging for the HMRC because they have to operate two systems, and that has had some political attacks, because what we see here is tension between the UK and Scottish governments. So, for example, some people in Scotland might think it's unfair because they're paying, for example, more tax dependent on their income compared to those in the rest of the UK. Scottish Conservatives often argue this, and they say that it really does kind of punish success and it makes it less attractive for entrepreneurs, let's say. And also, UK-wide benefits, they can be affected by income thresholds, but they're still based on UK tax rules, not the Scottish ones. So that hasn't been altered. Now, this does lead to misalignment issues where Scottish taxpayer might pay more income tax, but then therefore lose eligibility for some of the same benefits at the same income level in, for example, England. Which again, when you're questioning equity and fairness, some might say that's not.